Joining us for a conversation is world-renowned resource stock analyst, Andrew Hecht. Mr. Hecht, welcome to the show, sir.
Thank you, Maurice. It's always a pleasure to be with you.
Likewise, it's great to have you back on the show to discuss diamonds, which are undergoing a once-in-a-generation opportunity. Mr. Hecht, you just published a piece entitled Diamonds Are Forever, but the market for diamonds just underwent a massive change. Let's begin at the 30,000-foot level and share with us, why are diamonds forever?
Well, it takes over 1 billion years, Maurice, for a diamond to form. It's a hydrocarbon. It's a carbon. So it takes over 1 billion years for it to form. And, it's a forever thing. People tend to hold them for their lifetimes, pass them down to their heirs. Diamonds are a symbol of love and devotion and commitment. And, the diamond industry and De Beers has done a wonderful job marketing diamonds as a symbol of love, devotion, and commitment. And, marriage and, anniversaries and birthdays. And, they're marked particularly for women and more so for men today with the gift of a diamond, which is a forever gift.
Well, you're going to make a lot of men upset here if they're having their significant others listen. Well, I brought you on today because there's a number of value propositions that are presenting themselves, but I think there's one that you've just identified, which are diamonds, that the market is definitely overlooking. And I want to begin with a comment you made in reference to Vladimir Lenin, where he once stated, there are decades where nothing happens, and there are weeks where decades happen. This is a perfect analogy which is happening right before us, as there's a massive change occurring in the diamond space, which may present a tremendous opportunity for speculators. Can you comment on that for us?
Well, I put the quote in there because it's kind of a prophetic statement from the man who established the Soviet Union, well, first Soviet Russia and then the Soviet Union over 100 years ago now. And his successor, Vladimir Putin, moved troops into Ukraine to try to expand the territory of the Soviet Union of Russia, the Russian Federation, after the breakdown of the Soviet Union back in the late 80s or early 1990s. And it just so happens that Russia is a country that has the greatest amount of diamond reserves and is also the world's leading producer of diamonds, of gem quality and industrial diamonds. And since the invasion, sanctions by the U.S. and by Europe, is a significant factor for diamond supplies worldwide. Look, I'll give you a couple of figures. Russia, in 2020, they produced 30.5% of the world's diamonds, and their reserves of 650 million carats are twice the amount of the second leading country with reserves, is Botswana, with 310 million carats of reserves. So, the war in Ukraine and sanctions by the U.S., Europe, and other allied nations are a significant factor for the diamond market, and that's just happened over the last month, less than a month.
And there's actually a bifurcation that you just referenced. Can you expand on that? You referenced gem versus rough diamonds. What's the difference there?
Well, rough diamonds are what come out of the Earth's crust in diamond mines, and rough diamonds are what diamond producers make. And then, some are of better quality than others, but the diamonds that we buy for our significant others or we buy for ourselves are polished and cut and put into a form of the beautiful stones that we adorn.
And I believe this it's about a 20% that makes the quality of gem. Is that correct? And then the rest is used for industrial purposes.
Yes. I mean, look, diamonds, the industrial diamond market is big because there's nothing that can cut through, that can be used in manufacturing processes like diamonds for cutting and those types of purposes. So the industrial diamonds are key. To harken back to my career when I ran various commodity businesses for Philip Brothers, Fibro, and Solomon Brothers. I put together the first joint venture with Russia. The company was Almaz Juveler Export. They were the largest exporter of platinum, palladium, rhodium, osmium, ruthenium, and polished diamonds out of Russia. And that was a very big business for Almaz in those days. And it's a very important export for Russia, and also very important import for countries around the world. But a lot of those diamonds were industrial diamonds that went to manufacturers and companies around the world that needed to use those diamonds in mostly their cutting processes.
Which is paramount to understand here on the value proposition. So you have the rough for industrial purposes. That's key, that I think that many of us overlook, because when we think of diamonds, we naturally think of something beautiful as a jewelry piece, but there's a second component that factors into the value proposition. Now,
exactly, it's a very, very, very hard stone. It's the hardest stone. So billion years to form. It's got pretty good cutting ability.
It certainly does. But prior to the crisis in Ukraine, the market was turning for rough diamonds. Can you explain on that?
Yeah, well, it's really a function of what's going on in the world economy post the pandemic that started in March 2022. Central bank liquidity and government stimulus has decreased the value of money, or the purchasing power of money, and forcing all raw material prices higher. And diamonds are no exception. I mean, they're a commodity.
Now,
so the diamond prices had been rising, even before the Russians started amassing troops on Ukraine's border, and then they crossed on February 24th.
Yeah, which reminds me, if you study monetary history, when there is a loss of confidence in the currency, the people will go back to physical precious metals. And I always noticed that there was a reference to holding diamonds and fine art. So you see the pieces of the puzzle forming right now before us, which again presents the opportunity that you're conveying to us today. Now, who benefits from this supply constraint the most?
Well, let's go back to the numbers. I talked about the reserves and the production that Russia has. And, you have, in terms of reserves, the top four are Russia, Botswana, the Democratic Republic of Congo, and South Africa. Those are the leaders in reserves. But the leaders in production of diamonds, the actual, physical stones, in 2020 was Russia, Botswana, and Canada. Russia, 30.5% of production, Botswana, 21.2%, and Canada, 17.2%. So it's the nations other than Russia that produce diamonds that are going to benefit because of the sanctions. Look, diamonds are not marked with the country of origin, and sanctions will be challenging because diamonds are kind of, we've heard a lot about diamond smuggling and things like that over the years, and some diamonds will make their way out of Russia even with the sanctions, but it will be less, and certainly the markets will favor diamonds that come from other producing nations. And South Africa, Canada, Botswana, those countries will benefit certainly, because the Western world, U.S., Europe, where there's these are wealthy areas and big diamond consumers, will forego. Now in China, they will still continue to buy Russian diamonds, but the U.S., Europe, they'll favor Canada, South Africa, other areas. So that's an opportunity for those diamond producers to increase market share at the expense of Russia.
And speaking of that, I'm just curious if the countries that you referenced, Canada, South Africa, are they going to be able to meet the demand?
Well, that's the big question, and that's the question that can really turbocharge prices. It's kind of sanctions are a mixed blessing when it comes to Russia, because in trying to hurt the Putin government and the Russian military, we are boosting the prices of diamonds and other commodities, and that through the back door, it's actually could help them in a way because supply constraints, supply less availability causes prices to rise.
Now, where do you see the diamond market heading?
Well, look, inflation is a tough beast, and war, the first major war in Europe since the end of World War II, only exacerbates the inflationary situation we're seeing on a global basis. So, I'm bullish on all commodities here. I continue to be, and diamonds are no exception. Now, bull markets rarely move in straight lines, but the problem with the diamond market is it's not like gold or oil or these other leading markets where there's a lot of transparency. It's kind of an opaque market, and De Beers, one of the largest diamond producers, and kind of, I like to call De Beers the OPEC of diamonds, because they've controlled a lot of the supplies throughout the years through agreements with other producers, and they've released diamonds to keep the prices, in a flow, to keep the prices steady to higher. And this situation only turbocharges the chances for higher asset prices, and diamonds are certainly an asset.
It sounds like there's an opportunity here for speculators. Let's find out how speculators can take advantage of the opportunity before us. Now, you've identified two companies that present a unique value proposition right now. Introduce us to those respectively, and how they're associated with De Beers, and what role do they play in the value chain, beginning with Diamcor Mining. What can you share with us?
Okay. So let's look at Diamcor. I just have some things that I want to hit on here. Diamcor is a junior mining company. It trades on the Toronto Exchange, and it trades in the OTC market in the US. As a junior mining company, it's looking for properties, and it has a long-term strategic alliance with, a lot of people who know the diamond business. The first thing that comes to their mind is De Beers. But if you ask the more layman, the consumer, what do you associate diamonds with? If you play a word association game, I would bet that many would say Tiffany, because the Tiffany diamond is a very famous, diamond, and it's the one that most women would love as an engagement ring or a wedding ring. And Diamcor has a strategic alliance with Tiffany, and Tiffany is synonymous with diamonds. Now, Diamcor acquired the Krone-Endora at Venetia Project in South Africa from De Beers. They're in an accelerated phase 2 of a 3-phase upgrade to increase volumes as the demand for diamonds has been robust. The most recent sale by Diamcor yielded an average of about $300 a carat, which was 50% higher than the December 2021 price, a very short time ago. The company has revenue flows, and it's been profitable, and a high percentage of the diamonds that they have are gem quality. The reserves are roughly 90% of the project area that has not been defined yet, which means that there's growth potential. So, there are reserves on 90% of the entire project area. So it's a really kind of interesting company, a junior mining company. And I think that it's a real potential because of the fact that, they have a strategic alliance with Tiffany, which is incredible. They bought their property from De Beers, and the property is producing. So that's an interesting company, certainly from my perspective.
And can I pause you there for a moment? There's something interesting you said there. Did I hear that correctly? They're increasing production threefold. Is that correct?
I said, oh, no. They're in accelerated phase 2 of a 3-phase process.
3-phase process.
To upgrade and increase volume. So they're already well along the curve in terms of their process here. And As far as how many times they can increase production, that's really a function of the other property that they have not yet defined. But there's diamonds on that property supposedly, and that gives it tremendous growth potential. We don't know yet, but perhaps more than 3 times.
Yeah, you look at the price per carat from December to now. That's a staggering number.
Absolutely, but that's that. It is. It's a very, very attractive number for them, and Tiffany is going to buy diamonds from this company. So I think they have the right of first refusal on the diamonds, and that's they're a big consumer.
All right. Well, let's segue now to the second company, Mountain Province Diamonds. What can you share with us?
Well, they're a Canadian producer, which is really attractive because, as we said, Canada, 17.2% of the flows of the production in 2020, and Russia, 30.5%. Now, you take that Russian production out of the equation, they become, the second largest producer behind Botswana. So, Mountain Province owns the 5th largest diamond mine in the world, which is, I hope I'm pronouncing it right, Gahcho Kué. It's GAHCHOQUE, and that's in Canada's Northwest Territories. They also own 100% of the Kennady North Project, which explores for diamonds in the Northwest Territories in Canada, and is, it has 13.6 million carats of reserves and inferred resources of 7.35 million carats. It's 10 million. That other property is 10 kilometers from the Gahcho Kué mine. It's got the highest grade diamonds in the De Beers portfolio at 1.55 carats per ton. It's the second most favorable mining district in Canada, in the world in Canada. It's got the company also for environmentalists. It has a sustainability commitment. It's committed to a green path for mining, and the exploration territory of 107,000 hectares of 100% owned claims and leases surrounding Gahcho Kué. So they own that, or they lease that. That's Mountain Province Diamonds. And this company trades on the Toronto Stock Exchange in Canadian dollars, and it also trades in the OTC markets in the U.S.
Would you be able to give us the symbol, please?
Yeah, that symbol is M like Mary, P like Peter, V like Victor, D like David, .TO for Toronto, and MPVDF on the OTC market. And I looked at those charts, and the stock has been trending higher.
Now, in summary, we've covered the value proposition today before us in diamonds. We've addressed sanctions, supply chain constraints, and the countries that would benefit the most under these circumstances. But in particular, you've highlighted 2 companies that merit our attention for our respective portfolios. They are Diamcor Mining and Mountain Province Diamonds. In closing, Mr. Hecht, what keeps you up at night that we don't know about?
I think the same thing, Maurice, that probably keeps you up at night, and a lot of our listeners out there. The world has experienced a bifurcation. We've gone from one crisis, the pandemic, to the next, which is now, I wrote an article a while ago about what I thought was a watershed event in early February. I wrote the article around February 6th when Vladimir Putin and China's President Xi shook hands on a $117 billion trade agreement and a no limits mutual support agreement. It set the stage for Russia's invasion of Kuwait, and could set the stage for China's attempt to reunify with Taiwan. And those actions, are posed a potential for a world war between nuclear powers, and that's a very frightening prospect. And I don't think, in my 62 years, I don't think the world has been as close mutually assured destruction, even more so than during the Cuban Missile Crisis. So, and there's a lot of ramifications to the sanctions and all these kinds of things. And, look, Ukraine is also the breadbasket of Europe, and so is Russia, and they supply 1/3 of the world's wheat, and the potential for famine and starvation and very high food prices are on the horizon, because those acres that usually support grain production are now mine and battlefields. So this is a very worrying time. And as I said, we went from one crisis to the next, but this geopolitical crisis reflects an ideological divide in the world that will impact our lives, not only for weeks and months to come, but for many years to come.
You've referenced the relationship with wheat and revolution in the past. Would you mind reminding us of what that comment was?
Yes, I did, and thank you for remembering that. I always say, if I ask someone, Maurice, what's the most political commodity in the world, 9 out of 10 people tell me crude oil, because crude oil, the majority of reserves comes from the Middle East, a very turbulent political region. But I would counter by saying that it's wheat, because if we look back in history, the French Revolution, that famous quote, whether it was hers or not, Marie Antoinette, let them eat cake when there was bread shortages in Paris. It cost her head. More recently, there were bread riots in many countries over the years that precluded government change. The most recent example is the Arab Spring in 2010 that started as bread riots because of rising prices. Wheat had reached an all-time high in 2008, and it filtered through to the markets. And in 2010, bread riots in Tunisia and Egypt led to sweeping political change across North Africa and the Middle East. So wheat is a highly political commodity. And by the way, the high in wheat in 2008 was $13.34 roughly per bushel. And in March, we traded at a new all-time high, $13.40. So that's going to cause some problems over the coming years in terms of supplies.
Those are definitely some alarming numbers. Last question, sir. What did I forget to ask?
Well, I thought about that, and I guess I would say, is it just diamonds? Is it just wheat? And no, it's much more, Maurice. In the current situation, Russia is a powerful commodity supermarket that produces palladium that goes into automobile catalytic converters, gasoline-powered catalytic converters, and we saw that price rise to a new all-time high. They're a leading producer of aluminum. We saw that price go to a new all-time high. Nickel went to over $100,000 a ton in March on the LME and almost took down the entire exchange. We just mentioned grain prices, and there are other commodities. China owns most of the world's rare earth metals, which are critical for electronics and all kinds of the consumer products that we use each day. So this crisis, we talked about diamonds here, and it's certainly going to affect the prices. And it's an opportunity certainly to look at these companies like Diamcor and Mountain Province Diamonds, but the ramifications are critical. Markets reflect the economic and political landscape. And I think that in our lives, we've never seen an economic and political landscape quite like the one that's developing now.
Couldn't agree with you more, sir. Mr. Hecht, for someone that wants to learn more about your work, please share the contact details.
Sure. You can read my articles on Seeking Alpha. I'm there weekly. I'm on Bar Chart almost every day. I write for investment.com. I'm a partner in Bubba Trading. And so I write a lot, and I don't do many podcasts, only with you, Maurice.
Well, thank you, and I'm honored, sir. And by the way, your work is also published on ProvenAndProbable.com.
Great.
Mr. Hecht, it's always a pleasure speaking with you, sir. Wishing you the absolute best.
Same to you, Maurice. Thank you for your time.
Thank you, sir.
The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice, or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.